Hey, real quick, when is the last time you thought about your quarterly estimated taxes? If your answer is, my what now? This video is absolutely for you. And if your answer is, oh no, I forgot, don't panic because we're going to fix that right now together. September 15th is coming up, and that is the Q3 estimated tax deadline. If you're self-employed, a freelancer, a sole proprietor, or even an S-Corp owner who pays themselves, you may have a payment due in just a few weeks. Hi, I'm Jessica from Kirk Business Solutions, and every week I make videos to help small business owners like you understand your finances without the stress and confusion. Today I'm walking you through everything you need to know about quarterly estimated taxes, what they are, who has to pay them, how to calculate your number, and exactly how to send that payment. By the end of this video, you will know exactly what to do. Let's get into it. What are quarterly estimated taxes and why do you owe them? Okay, let's start at the very beginning, because this is one of those things that trips up so many new business owners, and honestly, even some people who've been in business for years. When you work a regular 9-to-5 job and get a W-2, your employer withholds taxes from every single paycheck and sends that money to the IRS on your behalf. You don't have to think about it, it just happens automatically. But when you're self-employed, nobody is doing that for you. You are the employer and the employee. So the IRS says, okay, fine, but we still need you to pay your taxes throughout the year, not just in one lump sum at the April deadline. Why? Because the U.S. tax system is a pay-as-you-go system. The government expects money to come in steadily all year long. So instead of one big payment in April, you make 4 estimated tax payments spread out across the year. Think of it as prepaying your taxes in installments. And here's the thing that a lot of people miss. This isn't just for income tax. When you're self-employed, your estimated payment also needs to cover your self-employment tax, which is 15.3% on top of your regular income tax rate. That's the Social Security and Medicare tax that an employer would normally split with you. When you work for yourself, you pay both halves. So your total tax burden as a self-employed person is very often higher than people expect. And that's why these quarterly payments matter so much. Who exactly has to pay? Well, here's the general rule. If you expect to owe at least $1,000 in federal taxes after your withholding and credits, you are required to make estimated payments. For most self-employed people, freelancers, consultants, independent contractors, landlords with rental income, and small business owners, that threshold gets crossed pretty easily. Even if you have a day job with withholding and a side business, you may still owe estimated taxes on that side income if it is generating a meaningful tax liability. The 4 due dates you need to know every year. All right, now you know why these payments exist. Let's talk about when they're due, because the schedule is a little quirky and it catches people off guard. Here are the 4 quarterly estimated tax due dates every year. April 15th. This covers income earned January through March, the first quarter. June 15th. And yes, I know what you're thinking. That's only 2 months later, not 3. This one covers April and May. The IRS just calls it Q2. September 15th. This is the one that's coming up right now, and it covers June through August. And January 15th of the following year. This covers September through December. So right now, in late August, the Q3 payment is due on September 15th. That is your immediate action item from this video. One important note, if any of these dates fall on a weekend or a federal holiday, the deadline moves to the next business day. But September 15th this year is a Tuesday, so we're right on the standard deadline. Now, what happens if you miss a deadline? Can you just catch up next quarter? Technically, yes. You can still make the payment late. But here's the thing. The IRS will charge you an underpayment penalty, even if you end up paying everything you owe by April 15th. It's basically interest on what you should have paid, but it's still money out of your pocket that you did not have to spend. And for a lot of business owners, we're talking hundreds of dollars a year. Over time, that adds up. So the goal is always to pay on time every quarter and avoid that penalty entirely. How to calculate what you owe, the 2 methods. And this is the part that everyone dreads, but I promise it's not as scary as it sounds. There are two methods the IRS officially accepts, and I'm going to walk you through both. Method 1, the safe harbor method. This is the simpler one, and it's my personal favorite for people who want predictability. Here's how it works. Look at what you paid in federal taxes last year, your total tax liability on your tax return. Divide that number by 4, pay that amount each quarter, done. If you do this, if you pay at least 100% of last year's tax liability in equal installments throughout the year, the IRS will not charge you an underpayment penalty, even if you end up owing more when you file in April. That's the safe harbor. You're protected. One small caveat. If your income last year was over $150,000, you need to pay 110% of last year's liability, not 100%. Higher earners have a slightly higher threshold. This method is great if your income is relatively consistent year over year, or if you just want simplicity and peace of mind. You don't have to do complex math, you just divide last year's number by 4. Then there's method 2, the actual income method or the annualized method. This one takes a little more work, but it can save you money if your income is significantly lower this year than it was last year. Here's the idea. Instead of basing your payments on last year, you estimate what you'll actually earn this year, apply your expected tax rate, and pay accordingly. A simple version, take what you've earned so far this year, estimate your full year income, calculate roughly 25 to 30% of your expected profit for federal and self-employment taxes combined, and pay a quarter of that each period. The reason this can save you money is simple. If you had a great year last year and a slower year this year, you don't want to overpay based on income you didn't actually make. You'd be giving the IRS an interest-free loan until April. The flip side, if this year is shaping up to be way better than last year, the safe harbor method might actually cost you a penalty because your payments won't cover what you actually owe. In that case, you'll want to calculate based on current year income. The honest answer is that the right method depends on your specific situation. If you're not sure which one applies to you, this is exactly the kind of conversation worth having with a bookkeeper or tax professional. How to actually make the payment. Okay, you know what you owe. Now how do you actually send the money? Let me give you the options. The easiest and fastest way is IRS Direct Pay. Go to irs.gov and look for IRS Direct Pay. You can pay directly from your bank account with no fees. It's free, it's fast, and you get immediate confirmation. You'll select estimated tax as the reason for payment and the applicable tax year. This is what I recommend for most people. It takes about 5 minutes. And there's the EFTPS, or the Electronic Federal Tax Payment System. This is EFTPS.gov. It's a free government system specifically designed for tax payments, and it's especially popular with business owners who want to schedule payments in advance. You have to enroll first, which can take a few days, so if you've never used it, do that soon. But once you're enrolled, you can schedule all 4 payments for the year at once, which is incredibly convenient. Pay by check. If you prefer the old-fashioned way, you can mail a check with IRS Form 1040-ES. That's the estimated tax voucher. Make the check out to United States Treasury, write your Social Security number or EIN on the memo line, and note the tax year. Mail it to the address listed on the 1040-ES instructions for your state. There's also the IRS To Go app. If you want to pay from your phone, the IRS has an official app. It connects to Direct Pay and lets you make payments and check your payment history right from your phone. One thing I want to emphasize, keep a record of every payment you make. Screenshot the confirmation, save the email receipt, or jot it in a spreadsheet. When tax time comes around, your tax preparer will need these amounts and dates, and trying to reconstruct them from memory 6 months later is a headache you do not need. All right, let's bring it home. Here are your 3 big takeaways from today. Quarterly estimated taxes are how self-employed people and small business owners pay their taxes throughout the year. If you expect to owe $1,000 or more, you're required to pay them. The Q3 deadline is September 15th. If you haven't made that payment yet, now is the time. Don't wait. You can use the safe harbor method, 1/4 of last year's tax bill, for simplicity and penalty protection, or calculate based on this year's actual income if your earnings have changed significantly. And if all this feels a little overwhelming, if you're sitting here thinking, I don't even know what I owe, my books are a mess, and I have no idea where to start, that is exactly what we do at Kirk Business Solutions. We help small business owners get their books in order, stay on top of their tax obligations, and never get caught off guard by a deadline again. Head to kirkbusinesssolutions.com to learn more or reach out to get started. I would love to help you. If this video was helpful, please give it a like. It seriously helps more business owners find this content. And subscribe if you want weekly tips on bookkeeping, taxes, and running your business finances the right way. Drop a comment below and tell me, have you been paying your quarterly estimated taxes? Or is this the first time you're hearing about them? I'd love to know where you're at, and I'll read every comment. Next week, we're going to talk about something that trips up a lot of small business owners: how to pay yourself correctly as an LLC owner. You don't want to miss it. I'll see you then.